Many Muslims think the stock market is haram, but the reality is much more nuanced. Today, I am going to give you the exact Islamic rules that make an investment halal or haram in less than 4 minutes. No fluff, just facts backed by Islamic scholars. Assalamu alaikum wa rahmatullahi wa barakatuh. Brothers and sisters, my name is Leo Frey, and I help Muslims understand how to grow their wealth the halal way. By the end of this video, you'll know exactly 3 things. Number 1, when investing in the stock market is halal. Number 2, when it becomes haram. And number 3, how to check every single stock yourself in less than 30 seconds using free tools. So let's dive in. Here's a problem that almost every Muslim faces. You want to invest? You want to grow your money? You want financial freedom. But you're confused because online, everyone's saying something different. Some people tell you the stock market is just like gambling, pure haram. Others say it's completely halal, and you're overthinking it. Even Islamic scholars seem to have different opinions depending on who you ask. Your friends tell you one thing, your family tells you another. So how do you figure out what's actually true according to Islam? That's what we're solving today. Let us start with the absolute basics, because most people you won't even understand what the stock market really is. When you buy a stock, you are not placing a bet. You're not gambling. You're not playing a game of chance. What you're actually doing is buying a piece of a real company. You become a partial owner of that business. If the company makes a profit, you share in that profit. If the company grows, your ownership becomes more valuable. That's it. And here's the key. Islam clearly allows business ownership. The Prophet Muhammad himself was a businessman. The Sahaba were traders. Owning a business is not only halal, it's encouraged in Islam. So here's the important transition. The stock market itself is not haram. Buying and selling shares of companies is not haram by default. The real question is this: what does the company do with your money? What business is it in? How does it operate? That's where halal and haram come in. So let's break down the exact rules. There are 4 Islamic rules you must follow to make sure your investment is halal. I want you to write these down or save this video because these are non-negotiable. Rule number 1, no riba, no interest. This is the most important rule. If a company makes most of its money from interest-based transactions, it's haram. Period. This means banks are out. JP Morgan, haram. Wells Fargo, haram. Goldman Sachs, harama, uwa, because their entire business model is built on lending money with interest, which is explicitly forbidden in the Quran. Also, avoid bonds. When you buy a bond, you're literally lending money to a company or government and earning interest on it. That's riba. Don't touch it. Rule number 2, no haram products or services. The company must operate in a halal industry. If they're selling something that Islam prohibits, you can't invest in them. These include alcohol companies like Diageo or Anheuser, gambling and casinos like MGM Resorts or DraftKings, tobacco companies like Philip Morris, pornography platforms, obviously haram. Weapons used for injustice or oppression are problematic. Consult Sharia screening apps for specific cases. Pork production companies. If the core business is haram, the stock is haram, simply as that. Rule number 3, low debt ratio. Now this one is a bit technical, but stay with me because it's important. The company should have less than 30% debt compared to its total assets. Why does this matter? Because when a company has a lot of debt, it means they're paying a lot of interest to banks and lenders. Even if the company's main business is halal, you're indirectly involved in interest payments. So Islamic scholars set a limit. If debt is more than 30% of the company's total value, it's questionable or haram? The good news. Most tech companies and modern businesses have low debt ratio, but you need to check. Rule number 4, annual purification. Even if a company is mostly halal, sometimes they earn a small percentage of their income from haram sources. For example, Apple is a tech company. They make phones, computers, tablets. That's halal. But they also earn maybe 2% to 3% of their income from interest on the cash they keep in the bank. So what do? Once a year, you calculate what percentage of the company's income is not. Then you take that same percentage of your profit and you donate it to charity as sadaqah. This purifies your earnings. You don't keep the haram portion, you give it away to those in need. Most halal screening apps will tell you the exact purification percentage. It's usually between 1% and 5%. Now let me give you real practical examples so this all makes sense. Tesla, is it halal? Yes. Tesla makes electric cars, no haram products, low debt ratio, no major interest income. It's clean. You can invest in Tesla without any purification needed. Apple, is it halal? Yes, but with purification. Apple's main business is halal. They make technology products, but they earn a small amount from interest on cash reserves. So you can invest in Apple, but once a year, donate about 2% to 3% of your Apple profits to charity. Banks like JP Morgan, Bank of America, Citigroup, completely haram? No debate. Their entire business is based on lending money with interest. You can invest in them under any circumstances. Casino stocks like MGM Resorts or Caesars Entertainment. Obviously haram. Gambling is explicitly forbidden in Islam. There's no purification method that can make this halal. Stay far away. Coca-Cola, is it halal? Yes, with purification. They sell beverages, halal, but they have some interest-based income and a bit of debt, so you'd need to purify around 3% to 5% of your profit annually. See how this works? It's not complicated once you know the rules. All right, so now you know the rules. But how do you actually do this in real life? Here's your step-by-step action plan. Step 1. Check every stock before you buy it. Don't guess. Don't assume. Use free apps like Zoya or Islamic. These apps have already screened thousands of companies according to Islamic principles. You just type in the company name, like Amazon, Microsoft, Tesla, and in 10 seconds, it tells you halal, haram, or questionable. If it says questionable, it will also show you the purification percentage. Step 2. If you want to invest in the entire market, use halal ETF. An ETF is like a basket of many companies. Instead of picking individual stocks, you buy one ETF and own a piece of hundreds of halal companies. The two most popular Sharia-compliant ETFs are SPUS. It tracks the S&P 500 but only includes halal companies. HALAL, same concept, different screening methodology. Both are already You don't have to do the work yourself. Step 3. Purify your portfolio once a year. At the end of the year, check the purification percentage for each stock you own. Calculate that percentage of your total profit and donate it to a legitimate charity. This is not a tax. This is not optional. This is part of making your wealth halal. Step 4. Invest long-term. Avoid day trading and speculation. Islam encourages productive investment, owning businesses that create value over time. What Islam does not encourage is gambling, speculation, or trying to get rich quick by guessing if a stock will go up or down tomorrow. So invest in good companies, hold them for years, let them grow. That's the Islamic way of building wealth. Alright, if this video helped you finally understand halal investing in a clear, simple, and practical way, do me one favor, hit that subscribe button right now, because I'm going to keep breaking down Islamic finance topics just like this. No confusion, no complexity, just clarity, so you can grow your wealth the right way. the halal way. And if you have any questions, drop them in the comments. I read every single one. Jazakum Allahu khairan for watching. Wa alaikumu assalam wa rahmatullahi wa barakatuh.